and how to be able to deal with our core holdings. At the same time, that may mean we're not traders, obviously, but it may mean what we have to do in order to be able to maintain these core holdings. In the interim, we've got some very exciting things to tell you about that will make it so that the navigating the club is far easier. For that, I'm going to turn to Jeff, who has navigated the navigation.
Yeah, look, we overhauled the cnbc Investment Club website. Please check it out. It has a very fresh look to it. It should be much easier to find all of our different pages, whether it's trade alerts, analysis, portfolio, education, of course, which is a big thing that we're always striving to do. So please check it out. It should help ease some of the point of pressures that you've maybe experienced in the past. I think we'll probably have more changes down the road, but this is a good fresh start to it. Very clean looking.
Yeah,
I hope everyone enjoys it.
These are things that happen here, and I just say, wow. I mean, I hope people check it out because it is so good. Now, we have a lot of conflicting news today. We have retail sales that, for the most part, in aggregate, are too strong. But then we have Target saying that October was a weak month, very weak month, and November may be even worse. Then we have a call from Micron. This is now their third indication that things are too weak and they've got to cut back. So you have this mosaic, which basically says that the Fed needs to continue to tighten because we don't have it slow down, but don't tighten too much, maybe 50 basis points, because that could throw us over the edge vis-a-vis Micron, vis-a-vis Target. And by the way, Home Depot yesterday versus Lowe's today, which is good. So there's no doubt about it, Chip. It's a mixed picture. But the mixed picture, I think, skews to the downside because of Target's really very negative message.
Right. And the problems at Target, they're more on the discretionary side, which sort of jives with that retail sales number. If you look at the components of retail sales, the components that increased month over month, decreased. Everything that increased except for like electronics and appliance stores, sporting goods, general merchandise department stores. So food and retail, very strong. We're still seeing this shift in consumer spending to services.
Yes.
That's going to hurt, obviously, Target, that they don't have as much grocery as, say, a Walmart or a Costco. So that's kind of the shift that we are continuing to see from the consumer away from those discretionary
remember, they're also finally starting to own up, Target in particular, to the incredible losses from theft. Now, we all know when we go to the store that I was at Walgreens this morning, I saw that two of the things that I went. There was a Pepto-Bismol that was behind, and then you had to buy behind the key, the lock, which would be I very low hope that someone would come over, and then their brand, which you could steal all you want. I guess you're going to put it. This is the conundrum for somebody like a Target. How do you make it so your checkers are enforcers? And the answer is you can't. That's not what they came in the job for. So they're flummoxed, and their flummox is going to cost them several $1 billion. That is not something you want to see because that's really gross margin degradation. Now, let's go back over and talk about how this is all reflected in the Treasury market, which we know is what the Fed's, that's a premonition of what the Fed will do.
Yeah, so you do have yields down today, which is interesting. Usually when Treasury yields are down, you get a nice move in the NASDAQ. Oh, but now we can see it's been ticking up. Perhaps that's on some of the Fed commentary that we just had on our network. But again, kind of going back to how we viewed last week's historic rally, the move in rates, yes, it's positive for valuations, but it can only take you so far because if your earnings are weak, say like Micron, that's going to take your stock down.
Right. If we could go back for one moment to that 2-year Treasury picture, I want to show you something that I think is incredibly compelling when it comes to what we're trying to do with what you're trying to do with your money. Okay, so we brought for one brief moment, we go to 4.6. At 4.6, the want of strategists is to say, okay, we breached the 4.5 level, so therefore we're going straight to 5. We didn't. And I think the reason we didn't is because I think we're seeing, and I know I'm contrary to this, a top. And the top comes from all the things we're talking about, which is that there's just such confusion, it doesn't make sense to take rates to this terminal rate of 5. which makes me more bullish than I think most people.
Sure.
And I've been spending a lot of time on MAD, and I'll spend some time tomorrow at our club meeting on the notion of optimism versus pessimism and skepticism versus realism. They're all very different. Now, we've got a bunch of things to cover, but I do want to quickly mention that energy continues to intrigue. Why do I send Chef Marks this morning? Nothing other than the fact that my Rusty Brazil friend has put out a piece about EOG.
Yeah,
and now EOG is expanding and also paying the big dividend. We've got Devon showing discipline. We've got Pioneer, Core Holding showing discipline. We've got Kotar. And now I have a new one, EOG. Now, obviously, you can't own every single oil, but the oils remain, to me, an attractive place to be, even on bad days.
Right. They do have those great dividend yields. Yeah, the EOG piece was interesting in terms of that organic exploration that they're doing. They just had a nice find in the Utica. So we'll see.
But EOG was once the I'd say the primary grower in the patch, and then pulled back dramatically, particularly on natural gas at the right time, and is now re-energized. It's just an important stock for me. Speaking of important stocks, could there be anything more important than TJX and Estee Lauder? Both of which reacting very well to their news.
TJX reported this morning. It was a slight sales miss, but a nice beat on earnings, 86 cents versus 80. Merchandise margins flat year over year as strong mark-on mostly due to better buying was offset. They're still seeing some freight pressure, so that's something to keep in mind. They increased their U.S. comp store sales outlook for the fourth quarter, though they did guide earnings a little bit lighter due to a reversal in some of a timing expense that they had a benefit from in the third quarter to the fourth. So they narrowed their full year 2 pennies. But this is still going to be the winner when a Target has to dump all of that inventory.
Right.
When other department stores have to dump their inventory. That's going to go to TJX at great prices.
Right. And we already have Kohl's doing that. We already have Bed Bath doing that. And those are places that TJX can feast on. This trades ahead of when they're able to get excess goods.
Conference calls at 11 a.m. So, of course, we have to hear what they say later on. But, Jim, the stock's had a huge move. It's now back to flat year to date. Had a big jump yesterday, compounding on those gains today, even though Target is sending some shockwaves to retail today.
So we've got this one right. You get right and wrong. You're trying, of course, to bat more right than wrong. And another one that I think we urged pretty strongly was to take advantage of the decline in Estee Lauder, even though it seemed like there was nothing positive to be said. Well, that was wrong. Estee Lauder is turning out surprise earlier it was up, but Estee Lauder this is a bottom. They bought this Tom Ford. I don't know why people aren't understanding the existential problem if they let Tom Ford go. This stock is chiefly related to China, but at the same time, it's taking control of its own destiny with Tom Ford. Now, we could argue, look, we were pushing it right here. Do we need to push it right here? No, we don't. But we do like the stock very much.
Yeah, it's a good deal. It's going to secure that long-term arrangement that they do have with Tom Ford Beauty, which is growing very fast. Meanwhile, like what we talked about yesterday, they will license out the fashion part. The eyewear is a big part of that. So it's interesting. So they no longer have to pay royalty payments to Tom Ford. And now they also get a new revenue stream in terms of licensing it out. So the deal will be marginally dilutive to fiscal year earnings, 5 to 15 cents. But as a long-term growth driver, it's the biggest deal in the company history.
No, I mean, look, it's interesting. I talked last night about this notion of the stupid seller. Now, this person who's selling it, or this firm selling $1 or down 77, it means nothing, and they'll sell it down $2, $3, and that you'll be your opportunity. That's how I always look at the sellers. If they don't know anything, that means they can only increase their selling. Cisco tonight.
Big earnings tonight.
Cisco is supposed to trade on orders. The commentary is not that positive. That's good because we've had positive commentary going into the quarter. And NVIDIA tonight. Now, NVIDIA could be wrapped up in the notion of Micron or in China. And neither one is necessarily a positive for NVIDIA.
Yeah, I think we need to see how much of that gaming inventory glut, how much have they been able to work through ahead of a key product launch, and also, of course, data center. What can they ship to China? What is how's that market faring? Is it more resilient than than to believed? I don't know. Those are the key debates.
Right. I do know the inventory. They.
All right, guys. Thank you. Just want to kind of touch base here a little bit Please consider, if you're enjoying the program, please consider joining the CNBC Investment Club. I just want to let you guys know that sometimes I just stream some of the stuff here, but it's a minimum I'm streaming here. So I think it's $49.99 if you're getting value, and I think it's a great thing to do. I think it's a great thing because they give a lot of opportunity. So I want to talk a little bit about TJX. As you know, sometimes with the investment club, they have hitters and they have misses. So some things work out, some things don't work out. I think they may have most times I'm in the club, so they have more winners than losers, and I think they're doing a very great job. That's one of the reasons why I'm doing these videos and trying to give the people the content that has no way of getting it. Let us just talk about TJX. They just reported last night and they had a wonderful quarter. Would I buy TJX now? Maybe not. If you didn't have it, I'll still encourage you to wait. I thought that once the report, they would have gone down, but we see the opposite happen because the conference call was at 11 a.m., as Jim just said, and the stock continued to do great. So that was a great one. Let's just talk about China and the reopening, and we had SD Lottie. As we talked about that earlier on, it's like 226. Not bad. I still think it's a buy. I think this stock was a $350 stock a couple months ago, so you can get into that a little bit. So on days like today, I encourage you to just sit on your hands and wait. There's times that not every time you have to buy, but there's times that you just have to sit and wait for a pullback. If you're going to do some buying, I would strongly suggest that you look at company like Costco. I know they said Target just reported, and they did talk about the theft and all the stuff that happened with Target. So I will really encourage you, if you want to get into retail and you're looking at retail, consider Costco. By far, it is one of the better retailers out there. The stock is continuing to do tremendous. So continue buying Costco if you're looking for a retailer. Now, if you want to buy something today and you're looking for something to buy, we see that oil dropped down. We see oil is down. So you could get Coterra at an amazing price. Right now, Coterra is like $26 with like a 10% dividend. I still like PXD, Pioneer Natural Resources. So these are the two, and Devon is still a good company. So get into the oil stock if you're looking for something to buy. I recommend that you take a look at the oil stock today, guys. And in the comment, let me know what apps are you using, what trading are you using. I am on Robinhood, and one of these days I'm going to show you guys my portfolio, but that would be a different video for a different time, guys. So consider Coterra today or Pioneer Natural Resources. I have Pioneer Natural Resources. They give the highest dividend, so I may just try to get some more if it falls around the 250 mark. Anyway, guys, thanks for watching the video. Please don't forget to comment and subscribe. And one more thing before we leave here, we know tomorrow there wouldn't be no meeting, but they will be streaming our meeting. I don't know, maybe I could put it up on my Patreon. I'm not sure how I'm gonna do it for here because since it's an hour, but I'll see what's gonna work out. Anyway, guys, thanks for watching the video. Please don't forget to comment and subscribe, and I'll see you on the next video.